Emotions versus discipline, the daily battle on the charts. The significance of trading psychology. Don't let the emotions control you. Relax. In the realm of trading, psychological aspects often outweigh technical proficiency. When it comes to determining success, emotions such as fear, greed, and overconfidence can sabotage even the most robust trading strategies. Thus, cultivating a disciplined mindset is vital for maintaining consistent performance. Understand that no matter your strategy, no matter how profitable you guys are, no matter how much money you've made from the charts, every single day is going to be a testament to your discipline, to how resilient you've become, to how consistent you are. Don't get lost in the sauce. Don't drown yourself in the profits. Whether you're losing, don't let that become you. Oh, I'm a loser. I'm failing. I'm nothing. Trading isn't for me. I'm just destroying myself. Get those negative mindsets out of your head. Same thing with the greed on the positive ends of things. If you're making a lot of money, don't think, I'm the best trader on earth. I can never lose. I'm the best. That mindset can also destroy you as well. Take your time. Take every trade logically. Take every trade with patience. Make sure you're sticking to your setup criteria and enter stop loss or take profit. Don't forget. Common psychological pitfalls. Confirmation bias. Confirmation bias refers to the cognitive tendency where individuals favor information that aligns with their existing beliefs or opinions, often disregarding or undervaluing evidence that contradicts them. This psychological phenomenon can lead to distorted thinking and reinforce misconceptions as people seek out and interpret information in a way that confirms what they already think rather than considering a balanced view of the evidence. So understand something else as well. If a trade is clearly dumping and you guys are in a long and it's falling way past your stop loss, please close. Just close. Some of you guys aren't profitable because of just these simple psychological pitfalls that you let happen yourself day after day. Stop thinking that you're right. You're wrong. And that's okay. Close quickly and keep your risk reward. Keep your size so then the next trade you can actually perform. Okay? Overconfidence. Overconfidence is the inclination to have an inflated perception of one's own abilities and skills. This excessive self assurance can lead individuals to engage in risky behaviors or make decisions without fully considering the potential consequences. As a result, they may take on challenges that exceed their actual competence, ultimately leading to negative outcomes. Stop getting cocky within your trades. I don't care if you guys have been streaking for 3 months straight. Stick to your setup criteria. Don't just start doing anything. Oh, I know price has to move in this direction. Oh, I'm not going to stick to my stop loss. It has to go. Relax. Get out of your head. Humble yourself. Otherwise, your bank account and God will humble you. Fear of missing out. FOMO. The fear of missing out, commonly referred to as FOMO, is a psychological phenomenon that drives individuals to make impulsive trading decisions due to the excitement and buzz surrounding the market. This feeling often arises when traders see others profiting from certain investments, leading them to act quickly in order to not miss out on potential gains. As a result, they may engage in trades without fully analyzing the risk or conducting thorough research, ultimately making decisions based on emotion rather than strategy. Understand that you guys just need to stop entering out of FOMO. I don't care if the chart is blasting upward or blasting straight down. That doesn't mean just get in. Wait, play some break and retest, wait for the stare to be created, and play within a logical formation. Don't blow your account doing anything. Developing a robust trading plan. Define clear entry and exit criteria. Define clear and specific standards that must be met for individuals or entities to gain an entry into a program or system, as well as the conditions that must be satisfied for them to be exit successfully, known as take profit. This includes outlining qualifications, known as entry criteria, requirements, and any necessary evaluations for both phases. So you guys should know where your take profit's going to be. You should know where your stop loss is going to be if you're going to lose. Don't get emotional. Don't panic. Understand that you have everything within your grasp. You got this. Take your time. Establish position sizing based on risk tolerance. Assess your individual comfort level with risk to determine the suitable magnitude of your investment stake. Some of you guys are popped and panicking because you're just trading with your entire account, 50% of your account, 30% of your account per trade. And then you're wondering why you're feeling so nervous, you're feeling so scared. Take baby steps. Understand it's okay to walk before you run. You're going to get there eventually, inshallah, if God wills. Just take your time. Don't get lost within the fact that you want to get profit today. Understand that this is the skill. This is something you have to progress in. And just like a plant, you have to water your plant seeds every single day, get the correct amount of sunlight, and be in correct soil. Otherwise, you will not flourish. Regularly review and adjust the plan as needed. Regularly assess the effectiveness of the strategy and make adjustments as needed to ensure optimal performance. So if you guys know how to find good levels and you notice that breakouts, sometimes you guys are getting pulled back on, maybe you guys should swap to break and retest. Okay, play something a little bit more logical, something more formatic. Okay, set risk management rules, including stop loss and take profit levels. Develop comprehensive risk management protocols that include the identification and setting of stop loss and take profit thresholds to safeguard investments and optimize returns. So you guys have to make sure that you know when you're going to get in, know when you're going to get out. This takes a lot of pressure off of you. This point, it just makes trading linear, okay, instead of robust. The point is to control the charts as much as possible. The power of a trading journal. Track your trades. Thoroughly record every transaction in detail, ensuring to include the rationale behind each decision, the emotional reactions experienced during the process, and the outcomes that resulted from these transactions. Leverage valuable insights to improve existing strategies and cultivate a strong sense of discipline. So if you guys are running to a bad period, you feel like you're just losing, you're not successful, and you guys might be in your head. You might be going through a negative, time period. Reflect back on your trading journal when you were running it up, when you were doing well, when you were performing. You guys are going to have that data to go back on and be like, okay, I'm doing decent. Because sometimes you do fall off. Sometimes you might climb to the top of the ladder and fall down, and that's fine. But when that does happen, don't panic. Reflect and understand that at the point in time you were up on the top of the ladder and you can climb even higher again. Don't let the fact that you just fell down make you crumble. Reflect on what you did last time and get back to that. Get right back on track. Don't trip. Mindfulness and emotional regulation. Mindfulness techniques. These practices can significantly enhance your ability to focus and reduce impulsive actions, leading to better decisions making and self control. So before you just get into a setup, because you see price action is moving within a heavy, volatile way, relax. Think about what you're doing. Think about what you're risking. Think about what you're going to lose. If you guys just worked an entire 2 weeks, you don't want to just lose the whole work check in one setup, which has happened. And I'm telling you guys, that's not something you want to experience. Take your time before you make any decision within this world. Think. Think before you make any decision. And I promise you, you're going to be able to save a lot of emotional pain and you're going to save yourself from a lot of stress in the future. Prepare yourself for all the negative outcomes, and you guys will have positive outcomes from there. Building mental resilience. Pre-trading preparation. Assess regulations, check your news on forexfactory.com, establish objectives, and envision achievement. Performance monitoring. Evaluate emotional conditions, see if you're nervous, see if you're scared, see if you're greedy, see if you're overconfident, and correct all those things. And the quality of decision making. Is it a good setup are you taking? Is that an A plus setup? Is that enough price action that you need to be seeing? Mindset enhancement. Faster reaction time, foster patience, and cultivate your discipline and flexibility through real life. Make sure you guys are working out, eat healthy. Don't engage in lust that's not going to be productive to you. Take your time, lock in. Some of you guys say you want to get to the next level and it's just not true. You lie to yourselves. You don't put in the hours, you don't put in the work. And you're going to continue and stay on that hamster wheel if you don't progress, if you don't wake up, if you don't change things. Otherwise, you're going to die a rat. So understand that when you're navigating drawdowns, don't crumble. Don't view yourself as a failure. Don't view yourself as you're not successful. Take that loss and understand that life is like a slingshot. Sometimes you have to be pulled back to go forward, way further than you can even ever imagined. Recognize that drawdowns are an inherent aspect of trading. It is advisable to refrain from making impulsive changes to strategies during periods of losses. Emphasize the importance of long-term consistency rather than prioritizing immediate results. I don't care if you guys made 10 bands within a trade. If you don't know about keeping money, you can quickly lose it. Practical techniques for mastery. Visualization. Engage in mental simulations of trading situations to enhance self-assurance. So if stop loss were to get hit, pre-prepare your emotions. If something were to happen, pre-prepare your emotions. How would I react if stop loss were to get hit? Would I cry? Would I crumble? Would I be desperate to make some profit? Or would I react within a logical way and understand that maybe this trade didn't work out and my risk reward will be there for the next trade? Within the trading realm, there's going to be ups and downs. Within the 5-figure realm, 4-figure realm, 6-figure realm, no matter what level you're at, your psychology is going to be the main factor that's going to get you either to the next level or pull you right back down to the hamster wheel where you began at. Don't get overconfident, stay logical, stay consistent, stay prayed up with God, and don't lose yourself, even when you become successful.